Professor, it's good to have you back in overtime. Welcome. Nice little comeback here today. Yeah. Is it a sign of things to come this month? What is your outlook?
Yeah, I think so. I took a look at we've had a total of 27 inflation indicators over the last 30 days. Producer prices, consumer prices, GDP, and even in today's ISM report. Out of those 27, 26 have been below expectations. Inflation below expectations. In fact, the price index in the ISM report this morning, the last 2 months was the biggest decline that we've seen in the price index, second biggest decline in 70 years. So only exceeded by the great financial crisis. So the inflation news is really on the ground, really coming in really well. And that's why I was shocked when, Powell was sort of acting last Friday like things are just getting worse and worse and worse. He has to stay, the course. Scott, I look back at last September's meeting. So this is very important. Last September, half of the FOMC said there was no need to raise interest rates in 2022. 5 said by only a quarter a point, and the most hawkish members said we may have to raise by 50 basis points by the end of this year. So do they really have the ability to see the future? Not really. Have their predictions been good? I mean, Laura Mester says, don't, read my lips. We're not going to lower rates. Well, it was just a year ago when everyone said, I'm not even thinking about raising rates.
Okay. I got you. But you know what? That underscores your overall point, and that is I don't believe the Fed. And that's why Jay Powell has to come out and continue to be hawkish, and others have to too, because there are a lot of non-believers like you who don't think that they're going to do what they say they're going to do.
Well, they certainly didn't do what they wanted to do last year because things got a lot worse. And now when the data on the ground is getting better, I thought Powell should have said, well, what are you looking at? If you're looking at year-over-year CPI government statistics, we know that housing prices come in with a big lag. They're going to continue to push up those official statistics. But talk to the people on the ground in the real estate market. Look at the Case-Shiller report or the government report that just came out 3 days ago. Well below expectations. Actually, people on the ground tell me real estate prices are now falling. That won't be in the official statistics. No, certainly not on the CPI for many, many months. But on the ground, things are looking so much better.
So you think the Fed's going to make a mistake? That's what this boils down to. You think they're going to make a policy mistake?
I think they're going to begin to say, hey, you know what? This is, maybe we don't have to go to 4.5%. I think they should do another 100 basis points by the end of the year. The market expects a bit more, but that does fulfill a good tightening. I don't think they need to go higher than that. And, scaring the market saying we're going to stay high through 2023 when they have no idea what's going to be happening in 2023, I think it was really not a good image to project.